Hey, Scott from Alpha Charts with a state of the market video. Today is September 9th, 2023. Before we get started, this video is for educational purposes only. This is not recommended to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Okay. Before we get started, you can follow me on Twitter as well at AlphaCharts365. That's my Twitter handle. And then if you really like my work, I do have a subscription group. And this subscription group, really, in the end, it's about the time that I'm going to be able to hopefully save you for a measly $10 per month, right? Very small amount of money. But if I can save you 2, 3, 4, 5 hours a week of doing your research, I think that is an excellent trade-off, right? 5 hours a week, 4 weeks, 20 hours is $10 worth 20 hours of your time. I think it's an amazing deal. So if you're interested, check it out. Go to alphacharts.com, alphacharts365, and click on subscribe. It's $10. You cancel anytime, but it's a really, really good deal. Let's get to the charts. SPX. We have this lower high here, which is concerning. And prices below the 50-day moving average. It's hard to see here with this area kind of outlined, but you can see prices below the 50-day moving average. Right? It's at 44.57, right? So that's a problem. It's always tough to be bullish the market when prices below the 50-day moving average. We'll see how things play out next week. There's CPI and PPI next week, Wednesday, Thursday. So just be aware of that. We're above some of these bigger levels, especially this one, I think 43.15-ish or so, 4,300. It's a big level, but we do have that lower high. So we need to be concerned. On the week, what did we do on the week? On the week, price was down 1.29%. On the equal weighted, it was down 1.92%. And as you can see on the weekly, still below this key area. That's a problem. Nothing much more to say about that. Qs, again, you have this lower high. You just kind of see it's outlined by this trend line. Price is sitting basically on the 50-day moving average, but is slightly above it. I guess that's a positive if you want to look for a positive. Very low. Let's see what the volume was for the week. Yeah, low volume week. It was down though 1.33%. And if you notice, it's just an inside week. SPX was an inside week too, by the way. If you really look at it, let's go and zoom in here. SPX was just an inside week, but it does have this lower high, which makes me concerned. QQQ was an inside week as well, down 1.33. Again, not doing anything terribly wrong, but still down a very good week. And the equal weighted was down 1.3, so about the same. So selling was broad-based, but again, on slightly lower volume. It was the second, Labor Day week. We were closed today, so that probably explains a lot of the lower volume. IWM, we'll just keep it on the weekly just to see what the week was down. 3.63. So if IWM really took it on the chin this week, it is retesting the 200-day, well below the 50-day, which is now pretty much flat for the most part. And everything is starting to align bearishly. And I think that it's very likely, even if we get a bounce or two here, at least to retest the trend line, if not the longer consolidation area right there. Again, it's just a bearish look to it. There's no other way to look at it, right? So, some concerns on the index levels. Let's look at the ETFs and see if they show us anything different. XLF was green on Friday, which is interesting. But below this trend line, so not great. And again, sitting on the 200, below the 50. $30 is our big level. On the week, it was down 1.12. Again, not a great week for it. And again, we're just getting this really bunched up flat, no direction, no trend type of price action on XLF. So it's not falling apart, but it doesn't look great either. SMH being probably a lot more important. You had this area right here, and we tried to break out and couldn't. And now we made some significant lower highs here. here, right? And now price is back below now for 2 sessions with a gap, with the gap down. Not a good look. Below the 50-day, strongly below the 50-day. Here comes a rising 200-day. It's gonna be interesting to see if price and 200-day do meet and where they meet, because here's your VWAP from I think it's NVIDIA earnings is where I have it anchored to. It's right where the 50-day is, right where all the moving averages. This is some overhead resistance, I think, that's forming pretty significantly right now. Again, lower high, significant lower high here. 157 is a pretty big area, I think. Yeah, so not a good look for SMH at all. Let's look at ITB. By the way, before we do that, let's look at XSD, equal weighted. And equal weighted is already coming down to almost its $200-day moving average, right? Again, very similar look, but the 200-day is much closer. And I think that's a problem for the equal weighted semi. So both look pretty rough. Let's go ITB. Home construction. Have the cup and handle, but it again also is below the 50-day right now. How many times have we said that? Not a good look. And then you've seen some distribution showing up on the chart as well. Looking at, what else should we look at? XHB, just to round out the housing idea. XHB, again, which incorporates more, less builders, more ancillary type services, people that service them. This is a problem, right? Rising wedge, right into supply. We talked about that. And now it's trying to move lower. What else do we have? Oh, transports. Not forget about transports. There's your rising wedge, and transports look really bad back below this area. Again, they're I think a leading indicator, and they're doing. Oops, didn't mean to do that. And they're doing very, very poorly. I think this is maybe a 1, 2, 3 type of leg down. We'll see what happens when it meets its 200-day, but it's a problem, I think. Going to the insurance. Okay, so as far as what do I think about the sectors, they're rough, man. It was hard to say something nice about them. So that tells me they are rough. Let's see the internals now. Well, the VIX says, I don't agree with you. The VIX says everything is fine. So one's right, one's wrong, right? Is the movement of the indexes and the sectors correct, or is the VIX correct? We've been like this for a while now. So one of them's going to give, there's a divergence going on right now. And one of them's going to give, tough to know. My guess would be sectors are probably more right, because that's the movement of price. VIX is a secondary indicator. Looking at credit spreads, credit's a big deal, and they're really not moving but budging at all. Question is, does credit have it wrong? It's possible, right? So VIX and credit are the two things that are saying, everything's fine. Not sure if I totally agree with that or not, but that's what they're telling us. But call ratio tells us that everyone has 1 foot in the door, 1 foot out the door, which is where it is a lot of the time. It is not extreme, and that's where we get our best signals from, our only signals, really. It's not there. And breadth, looking at the percent stocks above the 50-day moving average, continues to deteriorate, right? So, the internals you have, aren't deteriorating yet, but the breadth is, which is kind of a problem, right? But we're not washed out, so there's still some room to go. Let's do the dollar, because the dollar is super important at this point in time. And you see the dollar continues to rise. I mean, all week long, it rose. I mean, it was basically even on Friday, but it continues to rise. And if it does continue to rise, this is going to be an issue if it gets above 105, 106, 105.50, 106. That's a big deal. We'll see if it does, but I'm definitely watching that. And then 10-year yield, again, I'm in the camp of we're going to 5% at some point. Don't know when. And And you can kind of see, let's go to weekly on this one so you just see why I'm saying that. We had from the 1980s, we've had a downtrend in the 10-year yield. And then COVID changed everything. This little capitulatory move, and then the yield started to rise. You see that this 3-ish area, 3.1 area was important. We got above it. We retested it. Very similar to this. And you see this area was kind of important as well. And the next important area is this 5 or 5.1, 5.2, something like that % area. The prior trend is higher. There's no reason to think that this will not come up to the 5.2. I'm not saying it's going to blast through it, but I think come up close to 5, between 5 and 5.2. Yeah, I think it's very likely. And I think that's going to put a lot of pressure on equities if that happens, as well as a rising dollar. Big problems there. We're not, it's setting up, but it's not quite there yet. But just something to watch, right? It's what I'm watching. And did I screw this up? Oh, I did buy itself. Look at that. Still half sleeping. Let's go. And copper gold ratio, is really not doing anything. It is pretty nasty looking bar on Friday, but overall not that much out of character. That's on the weekly. Sorry about that. Here's a daily, and really just a little sideways move. Still above the green area. Below the green area is a problem, right? So we'll see if it's trying to get below it or not. It kind of dipped below it, came back, dipped below it, came back less. And if it dips below it again, it's probably a bigger problem. All right, so let's wrap this up. Right now, most charts are saying that there is at least reason to be cautious. The market, especially when things are below the 50-day moving average. We'll put that on there so you can see below the 50-day moving average. So just be real careful with that. Don't forget, check me out. Let me save you some time every single week. Every week, for $10. There you go. At Alpha Charts 365. Have a great day, everybody.